What if the same company that broke Wall Street just made a move that could break the internet? GameStop, the original meme stock, just announced it's adding Bitcoin to its corporate treasury. This is 100% confirmed and could signal a brand new era, not just for Bitcoin, but for you as an investor. If this plays out as some predict, it could shift how corporations hold money and unlock a wave of Bitcoin adoption affecting portfolios worldwide. So let's break it all down. Why GameStop did this, how it connects to Tesla and MicroStrategy, and what it could mean for Bitcoin's future. Just announced it's adding Bitcoin to its corporate treasury. On March 25th, GameStop made headlines by officially adding Bitcoin to its balance sheet. This decision, backed by its board of directors, represents a shift in how the company is managing its cash reserves. Instead of keeping funds in traditional assets like dollars or short-term investments, they are now allocating a portion into Bitcoin, treating it as a treasury asset. The exact amount of Bitcoin GameStop plans to purchase hasn't been disclosed. However, the company has approximately $4.8 billion in cash on hand. Even a small percentage of that could translate into hundreds of millions of dollars flowing into Bitcoin, reinforcing its adoption as a corporate asset. Hints about this move surfaced earlier. Michael Saylor, the CEO of MicroStrategy and one of Bitcoin's biggest advocates, suggested GameStop might be the next company to adopt a Bitcoin strategy. He even mentioned that Marathon Digital, a Bitcoin mining firm holding 46,000 BTC, could face competition from GameStop. Ryan Cohen, GameStop's chairman, has been quietly signaling this move for months. His interactions with key Bitcoin proponents, including Saylor, suggest that GameStop's decision wasn't impulsive but rather a calculated strategic shift. Additionally, major shareholder Strive Asset Management publicly encouraged GameStop to adopt Bitcoin, citing it as a powerful hedge against inflation and a method to enhance long-term shareholder value. More companies are adopting Bitcoin for three primary reasons: hedging against inflation, long-term appreciation, and signaling innovation. The first reason is inflation. With central banks printing money, the purchasing power of cash declines over time. Data shows that since 2020, $1 now buys only 74 cents worth of goods. This affects not just individuals but also corporations holding large cash reserves. Bitcoin, often called digital gold, offers a hedge against inflation due to its fixed supply of 21 million coins. The second reason is long-term growth. Despite its volatility, Bitcoin has been the best performing asset of the last decade. Companies want their capital to work for them rather than sitting idle in traditional savings accounts or government bonds. By holding Bitcoin, companies gain exposure to an asset with a history of exponential growth. The third reason is positioning as an innovative company. Holding Bitcoin signals to the market that a company is forward-thinking and willing to embrace financial evolution. This can improve investor confidence, boost stock prices, and attract tech-savvy shareholders who see Bitcoin as the future of finance. GameStop is not the first company to integrate Bitcoin into its financial strategy. Several high-profile corporations have already taken this route, setting a precedent for others to follow. In August 2020, MicroStrategy became the first public company to invest heavily in Bitcoin. They initially converted $250 million of corporate cash into Bitcoin and have since continued accumulating more. Today they own over 500,000 BTC, worth over $40 billion. Their commitment to Bitcoin is so strong that they even rebranded as Strategy to reflect their focus on Bitcoin investments. Tesla followed suit in 2021, purchasing $1.5 billion worth of Bitcoin. The announcement alone caused Bitcoin's price to surge by 20% in a single day. At one point, Tesla even allowed customers to buy vehicles using Bitcoin, further integrating the asset into mainstream finance. Other companies like Block, formerly Square, Coinbase, and MassMutual have also quietly been accumulating Bitcoin. The trend is clear. Corporations are beginning to treat Bitcoin as a legitimate reserve asset rather than just a speculative investment. Now in 2025, GameStop joins this list. However, unlike earlier adopters, they are making this move at a time when Bitcoin has gained more regulatory clarity and widespread institutional acceptance. This could encourage even more companies to follow their lead. In the short term, GameStop's Bitcoin purchase may not dramatically impact the price. When the news broke, GameStop's stock jumped by about 15%, but Bitcoin itself saw minimal movement. Traders remain divided on the short-term implications of this move. Some analysts believe this could be a bullish signal, while others, like Josh Mandel, who correctly predicted Bitcoin at 84K, remain skeptical. Mandel has even suggested shorting GameStop despite its Bitcoin acquisition. This shows that market reactions can be unpredictable in the short run. However, long-term implications are much more interesting. Bitcoin has a fixed supply of 21 million coins, and corporate treasuries hold enormous amounts of capital. If even 1% of the S&P 500 companies adopt a similar Bitcoin strategy, it could inject hundreds of billions of dollars into Bitcoin, pushing demand higher and further tightening supply. Another key factor is that companies like MicroStrategy have explicitly stated they plan to hold their Bitcoin indefinitely. When corporations commit to long-term holdings, it removes Bitcoin from the market, reducing available supply. Over time, this could create a supply shock, driving prices even higher. One of the biggest questions now is whether other companies will follow GameStop's lead. Historically, financial trends tend to gain momentum when early adopters see success. GameStop isn't a financial firm or a crypto-native company. It was a struggling retail business that has now positioned itself as a forward-thinking innovator. If a company like GameStop can make this move, there's little reason why others, such as AMC, Shopify, or even Apple, wouldn't consider doing the same. The biggest obstacle for most companies is fear. Executives at major corporations are often risk-averse, especially when it comes to handling billions of dollars in corporate funds. A failed Bitcoin investment could result in job losses or boardroom shakeups. However, as more companies adopt Bitcoin and see positive results, the risk of joining in decreases. The adoption of Bitcoin by corporations follows the classic S-curve of technology adoption. At first, only a few pioneers take the risk. Then, as the strategy proves successful, more companies start to follow, eventually leading to widespread acceptance. GameStop's move may represent a crucial tipping point. For individual investors, this shift toward corporate Bitcoin adoption presents new opportunities and risks. The narrative around Bitcoin is evolving from, is it a bubble, to, what if it becomes a mainstream reserve asset? This presents an asymmetric opportunity where the potential upside far outweighs the downside. Bitcoin might already be approaching $100K, but with increased corporate adoption, price targets of $250K, $500K, or even $1 million are no longer considered far-fetched. Personally, Bitcoin represents between 25 to 30% of my net worth. This percentage fluctuates due to market volatility, but my conviction remains strong. Since I'm younger, I can afford to take on more risk. However, this strategy may not be suitable for everyone. One risk investors should be cautious of is the rise of crypto-themed stocks. As more companies adopt Bitcoin, their stock prices may behave like altcoins, highly volatile and speculative. Careful research will be necessary to distinguish between truly innovative companies and those simply jumping on the trend. History shows that financial assets evolve. First, gold was the dominant reserve asset, then cash. Now Bitcoin may be emerging as the next global reserve standard, especially for younger generations. GameStop's decision to add Bitcoin to its balance sheet marks a turning point. This isn't just another company experimenting with cryptocurrency, it's a sign that Bitcoin is becoming a serious financial asset for corporations. What started as a movement led by MicroStrategy and Tesla is now expanding, and GameStop's move could inspire even more companies to follow. The key takeaway here is that Bitcoin's adoption is accelerating. It's no longer just a speculative asset but a potential reserve standard for businesses looking to protect their capital from inflation and economic uncertainty. Whether you're a seasoned investor or just starting, this shift presents both risks and opportunities. Let me know your thoughts in the comments. Do you think more companies will adopt Bitcoin, or is this just another hype cycle? Don't forget to like, subscribe, and I'll see you in the next video.